Markets yet again reject all-time highs in the S&P 500 and the resistance trendline over in the Nasdaq. Feels a little bit bull trappy into the end of the day. And it seems like this was just a little taste of what could be coming around the corner once we get the full labor report on Friday morning. Make sure to come out to the pre-market show where we'll cover that data live. But for now, the JOLTS and ISM Services PMI today both indicated that employment as well as prices paid are moving in the right direction. And this is a small signal that the Fed may not actually have to cut rates as aggressively. Not really great for the broadening out thesis in the market. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight, as we always do, on the SPY daily timescale, and the first thing we should evaluate is the trend, because although we are rejecting the all-time high, we technically made an all-time high, and this undoubtedly is a higher high in the trend count, and the trend remains in the upward direction on the daily timescale. If we're counting our lows, of course, we have lows, major higher low here, major higher low here over the daily 50 SMA. The problem is that today's daily bar did not close all that strong. It closes weak on the low of today's range, and it closes right at this key inflection point right here, previous all-time high, look above and fail number 1, and we have the threat for look above and fail number 2. Now, we did find a higher low after this failure right here, and the trouble this time around is if the market does pull back, it can technically find a higher low on an overshoot of 689 at 686, right? The market may look something like this, and that is well within reason for still a daily higher low. The problem with this just becomes if on the counter trend, or I should say the resumption of the trend, if this is a higher low, we're resuming the trend back higher. If the market then cannot get back over 689 and we fail here for anything that looks like this, suddenly some alarm bells start going off in my head, and I'm thinking to myself, hang on a second, the weekly equilibrium has now tried to break out twice. Here's number 1, shortened holiday trading weeks, we'll give it the benefit of the doubt, but Wall Street's back in full force, right? This is an attempted breakout on normal hours, nothing special about the market. So if it fails again, I would start to be slightly concerned. Now, is the market immediately going to drift into a daily downtrend? The answer in my view is no. You'll probably drift into an hourly downtrend, something that looks like this, to maybe approach an equal low back down here towards the daily 50 SMA. But that's not a daily trend reversal yet. It's just a failure to go higher. Where the real trouble would start to step up is, of course, underneath this low and a failure of the daily 50 SMA, which is currently valued around this 679.75 spot. So there's a lot of work that the bears would need to do if this chart is completely going to fall apart and become destroyed, but I am just acknowledging here on the daily timescale with the look above and fail into new record highs, right? We technically took out Tuesday's high, closed weak, dead on the lows of today's session. It certainly would seem like it's not unreasonable the market could overshoot this 689, and then of course there's your threat to the base case. You technically try to rally first, maybe that's Thursday, and then Friday on the full Monty labor report, if it comes in stronger than expectations, the Fed doesn't have to cut rates aggressively, I could see some semblance of a lower high developing underneath 689, and if you take, I guess the real inflection point would be, if you take out this low, if you fail the daily 20, I would expect that the market tries to navigate back down here towards these lows at 679.75. Now, this is a sort of mitigation to the base case. The base case as of right now, if we go to the hourly chart, might look something more appropriately like this. And I'll show you some supporting evidence as to why I think this is the case as we move through today's video. But this is a break and this is an hourly uptrend, right? That's fine. If the hourly sets a lower high here and can Brigade bolt under 689, fine. This is where the daily higher low steps up, and this would be the base case for continuation. Right? Something that stages that higher low, and instead of immediately just assuming that the market must reject 689, we'll of course keep an open mind to that on Friday morning in particular, right? If this is going to be a 2-day process, we kind of talked about this on the daily just a moment ago, if this is what Thursday is going to look like, and then we try to rally on Friday here, and then reject, maybe it leaves a large upper wick. We'll deal with that in stride. But the base case, if we pull back on Thursday, maybe we close like this, Friday's base case will be, as long as we're over 686, I'm trying to navigate this move back in the upward direction towards the all-time high, staging a daily higher low off the 20 SMA. So really what we've covered on the daily chart so far in tonight's analysis, is that this is a sort of threat to the base case that exists, and I am certainly aware of that, and going to be paying very close attention to it through the labor report on Friday. But my base case, right, that's a threat to it. The base case would be that this actually steps up and offers this back to the all-time high. And again, we'll talk about supporting evidence as we move through today's episode. That would be more so what I'm optimistic for if the market's going to remain bullish here. and get back up and over that 689. So why is this sort of more so the situation? Well, the market's had give and take, and this gap, I'm not going to say it's a true gap because we technically opened inside of that Friday range there, right towards the highs, but we haven't really tested this level in a firm sense, right? The market was straight down, it gapped up, and we really haven't developed any potential higher low offering on the hourly chart even up against that Friday high and the lows of this balance range. So it wouldn't be unreasonable in my view that the market needs to come in here, firm up some of this structure, offer the higher low, and then get off to the races. If we throw on the intraday anchored view apps, what we'll also see here, let's go intraday anchored view apps. Notice that the 20 SMA and the anchored view apps, I guess that's really what we're trying to focus on, are kind of in this zone, and the market's been overshooting like a wildebeest over the last couple of weeks. The market overshoots everything, it seems like. So if it's going to overshoot these areas, like this is potential arbitrary support, this is the level, and then get back above, like this is kind of why I'm thinking the market coming into this zone should be thought of as a higher low opportunity first, and if we stage the lower high in the future, we'll deal with that when that takes out the equal low here, right? So I guess simply said, my base case is that we do this. I know I've probably said this too many times now. Base case is this. If we fail at this little circle I've just drawn and end up with this dotted line here underneath the low of if this holds in here, that's where I say, okay, probably coming back in, you're really dealing with a daily equilibrium, setting the equal low on the daily time scale. We talked about this target just a second ago at 679.75, right? That's how I see the bears really trying to develop this chart. But again, the first thing I'm thinking about, daily uptrend, supporting evidence still leans slightly bullish. Can we set a higher low at the 20 and then on the hourly back over 689 for continuation into the all-time high? Hopefully that makes sense based on the way we've talked about it so far. Let's come in with a fib from here to here. Lo and behold, what do we have? Fib 61.8, line in the sand at this inflection point, prior lows, acted as highs. If we need to firm it up, it makes sense to stay over the fib 68.1. Picture perfect, like if none of this pullback even has to take place, if there's a rip and roaring rally overnight and we end up opening higher, guess what? I mean, this is fine. This is also fine for an hourly higher low and continuation in the upward direction. That's a fib 38.2, and maybe, just maybe, depending on time of day tomorrow, if it's late afternoon or maybe even early Friday, you'll have confluence with the anchored view apps at that 689, right? As they slowly drift higher, the more time is spent over that particular price point. So that's what I'm seeing here on the spiders. Let's take a look through some supporting evidence. Yes, volume outflows, but what I want to talk about here is if you're watching intraday into the close, this was a fairly aggressive sell-off, right? You had this little bear flag underneath this little pullback, right? Underneath the morning highs in here as well. And what the index score did was pretty remarkable. It didn't flinch at all in the downward direction. And I mean, we had some pretty negative ticks in here that were stepping up. The volume flows are technically out. All of this stuff is factored into the index score. But what's also factored into the index score is the relationship with the Nasdaq, the relationship with dollar, bond, rates, the whole 9 yards, volatility, all of that stuff, the top 5 heaviest weight components of the S&P, all of that is priced into, or reflected, I should say, in the index score, along with the sectors, the whole 9 yards, right? There's 30 data points there. And you mean to tell me in this aggressive rollover back underneath the opening print, that's some of the magic of the index scores, that it measures from the opening print, you mean to tell me as the index, the S&P itself, is aggressively breaking down under the opening print, the worst the index score could get is a +1 into the close? Look at this. Let me zoom in on this, right? Point to the negative impressions in here. There's no negative histogram, maybe a negative 0.5 in there. Let's go full screen just so I can really zoom in on this thing, and I'll show you. Okay, what's the worst it got? -1. Right? -1 on the histogram. But other than that, at a 1 on that aggressive sell side move we see here in the S&P, it's just not adding up that we had aggressive selling across the components that matter for the market itself. And of course, we could thank things like Microsoft, Amazon, Google up big time on today's session, which we'll get into as we wear forward. So market internals on the sell-off into the close, I guess what I'm saying, look at the tick as well, pretty flat in there. And even the advanced decline line, you would expect on a day where the market's selling off, if it's going to be aggressive with follow-through, perhaps you're going to get some kind of acceptance in trend lower zone, and it just didn't happen. So as I look at the internals dashboard, I think about breadth, I think about maybe some rotation going on, and I suddenly think back over to the SPY hourly chart, and I'm like, okay, you could overshoot this level, but I'm still thinking about higher low here to preserve the daily uptrend, right? Lows, higher lows, potential daily higher low here. We'll likely flip into an hourly downtrend to get there, either via lower high here, counter trend, and then slip. Now you have a lower low after a lower high, or you just Brigade bolt underneath, and inherently that will be a lower high under the 689. Remember, the hourly trend has to flip down for this to be a firm and concrete daily higher low, and then bullish back over 689. If we don't even have to get under 689, or maybe it's even more of like one of these, intraday quick little lower wick on a 5-15 minute chart, and then back above off to the races, Great. Market internals support the idea. We didn't really have all that aggressive selling into the close. The volume looks aggressive, but nothing else looks aggressive. And this I put quite a lot of emphasis into. I built it specifically for, kind of this reason, giving me better context intraday. Really wasn't all that bearish. Let's take a look over at the market profile. Let's keep moving through tonight's analysis. What do we see over here? If you're not familiar with this dashboard or the market profile type charts, check out the video tutorial in the top right-hand corner. We see that the value area is overlapping to up with the Tuesday session. The point of control is at Tuesday's high of day. Yes, the market on close orders, market on close orders here, looking for a pointer, they did bump out a little bit of volume down towards the lows, but not enough to flip the point of control. So if the market can spend time, testing that, what is the 689 on the spider's cash, which is the low in here, if the market can test this and start to rally, I would think the market's drawn more so back towards its equilibrium, aka the point of control. That's where the market's most comfortable distributing contracts, and once again, that easily stages an hourly high or low. Let's say HL, there we go. So this point of control not drifting lower is quite compelling, and once again, it seems more like end of day liquidation break, rather, trapped buyers from the dead high rather than new aggressive sellers looking to really rotate this market to the downside. If it was that, I would have expected a more thin drawn out profile lower with stable value, looking more like this, possibly overlapping to down with that Tuesday session. You could also see here that this inflection point, which is the pullback for that 20 SMA roughly, is still that untested high previous low. It's value area low in here also. It's not like we have disjointed value that's way up here. It's kind of a mechanical level, right? So pretty interested in that around this. It's about 69.40 in the ES futures. Let's go back on over here, and you can see right there, 69.40 right on our horizontal gray bar. All right, so that's the supporting evidence for the spiders. Let's jump on over to the QQQ side of the market here and see what's going on with the Nas. I mentioned in the intro, right, that rejection of the trend line. That's the trend line everybody is talking about, and I think rightfully so. There's your rejection. We tried to get some intraday momentum going up and over it, but it just kind of fizzled into the afternoon, which is kind of concerning. And therefore, on this chart in particular, I'm not as bullish. Let me just be the first one to say that. I'm not as bullish on the Nasdaq as I am in the S&P 500, and the reason for that, of course, is just that the trend isn't clear. Right? In the S&P 500, at least you're sitting on the highest high. In the Nasdaq, you have these higher lows, but you have those lower highs as well. And this failed breakout sort of just gives an opportunity where if we take out today's low tomorrow, then you're just looking at back to, dare I say, just confusion in the midpoint, the equilibrium of the triangle. And that's edge in and of itself, right? The idea that, hey, I'm not just going to start slamming Nasdaq longs as it pulls back because there's really not a trend. It doesn't have momentum. It couldn't sustain the breakout in today's session, right? It's the upper edge of the weekly expected move rejecting. The whole 9 yards here, back inside this little cluster, I'm just very, very neutral to Nasdaq. And I think, we'll change our tone to bearish when we look like this, and that's fine. We need to break the resistance trend line or the support trend line with some degree of confidence before I think we develop a trend here on the Nasdaq. So that's primarily, as simple as we can keep it. It's just waiting for a trend to develop on the Nasdaq when there hasn't been one for a little while now. Let's take it on into the hourly chart. The hourly trend is still up, lows, higher lows, higher lows. This is potentially still a higher low. Once again, you would actually require the breakdown of today's low tomorrow to get back to the midpoint of this sort of equilibrium, and that's where I just say, okay, hands off, right? If we could stay over this 623, not the end of the world. Over 623, trying to rally back up to an equal high. If the market goes lower wick, pop back above with a higher low, that's probably a long. Right? 3-day highs, Monday, Tuesday, and then Friday. And then you could also see Tuesday's intraday high here from this week. If we could wick below that and then stay back above, that looks pretty compelling, right? And you're talking about a really equal high, but then the gap close overhead is the next major target. That's 629.20 up to 629.75. If we fail it, once again, I want to be very clear, I'm not nearly as bullish in the Nasdaq, and I'm very open-minded to this, just playing games back inside the midpoint of the equilibrium near the moving average cluster, just letting it be. Do whatever you want to do in there, Nasdaq, but you're not going to fool me, right? We won't get fooled again. The Who will fire it up loud and clear in the morning session, right? So that is what we've got on that one. Let's throw on the intraday anchored view apps just to check in on where we're at with the stack. Again, like, why are we going to get all confused and tangled up in the moving average stack? There's just a lot going on there. And the structure, although it's trying to clarify on the hourly, on the daily, it's just not there, right? Could you technically set a higher low over the moving average set and maybe look like this? That's possible. That is possible that you could keep the higher lows up, but I'm not able to take a firm stance on the market, which I know not many people like. Everybody wants the answer, like, what's it going to do? What's the Nasdaq going to do? I just can't tell you. Today it rejected the upper edge of the resistance trend line. I would seemingly think with a lack of momentum, all it's going to take is a poorly received labor report, and we're back down at the moving averages. And then I just ask myself the question, okay, what do I do about that? I'm not long in here. I don't know if I'm short though either, because once again, what's the problem? You want to be short into the resistance trend line? I don't. So in this zone, as we really tighten up in this wedge, I think it's time to just let the market tell you what it wants to do before you really get committed to one side on the Nasdaq. And again, why can I be more confident on the S&P 500? Because we just went out to a new record high. The trend is more clearly up, higher high, right? So that's the big difference between the two big indices as of right now. Let's take it on over to our NASDAQ market internals. You can see a very flat picture on the volume flow, so even a little bit better there. So, make sense of that. The S&P volume outflows, chart looks bullish though with the higher high. NASDAQ, big old upper wick, no volume outflows. Kind of interesting, right? Once again, a little bit of push-pull divergence is quite clear between the majors right now. Advanced decline line, small, red under the zero line, not even close to trend lower zone, and a cumulative build that's ever so slightly red. Again, not enough evidence here to really pile on to the bull thesis and say, let's go, market momentum's in full force. Not there. Volume flows don't support it, but also not bearish, right? So it's not the answer many want to hear, but just having that flexible and open mind as the market's not trending here on the NASDAQ side, I think very important. Let's take a look over at the NQ futures, see what's happening in the market profile for these. I think it's very clear. The level here is mechanical with the multi-period lows, B, C, M, and A, flat across the bottom around that 25.8. If we could hold up over it, technically you're holding over the single prints that exist here in yesterday's session as well. If I just do this, you can see we had singles around that 25.8. So it's a short-term line in the sand, and does that align with everything we've talked about so far? Absolutely. We drop yesterday's low tomorrow, today's low tomorrow, then you're suddenly bringing in a rejection of the upper edge of the trend line there, and you have overhead supply from the upper distribution, value area today. Another thing I'd just point out is the close was down here on the NASDAQ. Close is right there. Where's the point of control? Midpoint of the range, right? So is it really all that bearish? No, but momentum's certainly not accepting near the highs. I think that's fairly straightforward. Let's jump on over to our small caps, where I think it's quite clear to see. Just give that a reset and come over here. This is extended through the upper edge of the weekly expected move, but is this bullish? Absolutely. Absolutely. Look at this bar. Look at this bar holding up on the pullback. We had that algorithmic buying taking place into the end of day on Tuesday. Let's just go to a 5-minute chart. Look at this. Tell me that's not an algo. Of course it is. So straight up buying, somebody's getting really positioned heavy in these IWM small caps. And all it would seem to me is that on the pullback today, that price is defended, right? If this breakout was what triggered the entry, then that price has been defended. And whoever's put this big long on or whatever, algorithmic or otherwise, there's a higher low opportunity. If I go to the daily chart here, what's important about it is as long as we're over these prior highs, right, that's just going to stage what? Higher low. Continuation. This is now out of its little funk. In here, it was pretty neutral, and we knew that we'd flip to bullish up and over the daily 20, over that 250, 275. That's exactly what we talked about in the weekend video, right? So as long as that's the case, as long as we're above it, I would say bulls on parade. Broadening rally takes place. Now, what's the threat? Again, it's poorly received news on Friday. So really, we have to take it in stride Friday morning at the 8:30 time frame. That's when the full Monty labor report comes out, and this is the JOLTS this morning came out with the November data, so that's not even December data, but the report on Friday is going to be the full labor report. So 8:30 up here in the office, come on out to the YouTube show. We're live every morning at 8 o'clock Eastern time anyways. We'll see how the market responds. If the market does not receive the labor data well, and what we could look for is likely a huge addition of jobs to the non-farm payroll number. We'll talk actual numbers in just a moment when we get to the fundamental analysis, but a big beat on the non-farm and a depression. I should be careful with my word choice here, not a depression for the economy, but rather a move lower on the unemployment rate. That probably hurts this a little bit, believe it or not. It's good data. It's what we want to see in terms of consumer spending, but we know that small caps are so dependent upon that easy money policy from the Fed. And if the Fed doesn't have to be as aggressive cutting rates, then maybe this comes back in and needs to noodle around inside this range. I wouldn't be bearish there. I'd just flip my tone back to neutral. Really on the small caps for the last couple of months, the way I've been treating this is just segmenting off price sections and thinking about the market through that lens. All right, so we have three actions here. Bulls on parade up and over 250, 275. Bit more neutral between 250, 275 and down here 245, 25. Then bears absolutely have a stand if we were to take out this low in the 50 SMA. That's a problem. Doesn't look like that's a top priority. So as of right now, bullish until proven otherwise, with the opportunity to change tone on Friday morning at 8:30. Let's take a look at the hourly chart. Let's go back to the hourly after just exploring that algorithmic buy. So JOLTS comes out. It's technically stronger than expected, and it's not indicating wage price spiral. Let me put it that way. The labor side of the ISM report comes out. It's technically implying growth of services employment. Prices paid are down, and of course, noting that the Fed doesn't have to cut in that circumstance. Well, you're down on small. So I think it's quite clear the market responded the way it should, based on how good news is kind of bad news for our rate cuts here and free easy money policy. That is what we're watching and carrying forward as a tone into the Friday session. Nothing to really read into other than, once again, high and tight consolidation after the algorithmic buy-in here. No real problems on the hourly or daily. Let's take a peek over at our Russell internals and see what's going on from this point of view. Small volume outflows. We had an inside day today. Nothing to read into there. Nothing to read into here. Nothing to read into here. I'd say the internals are much more important for that S&P 500 that went on to make a new record high, but then came in and faded aggressively back underneath previous day high. Let's take a peek just to finish it off with the RTY futures and see what we've got going on over here. And let's take a peek. So again, thin structure retracement, perfect support off the base of the algo sort of initiation. Point of control has been toppled, but that's fine. I think that tagging up to this high is more important than just allowing this to just float off in no man's land and keep going. So I'm not bearish this chart at all. I think it was bullish digestion, and it really hinges upon Friday. I think tomorrow could easily be a neutral situation for small caps that continue to stay above this level. The only threat to that, even for the Thursday session, forget about Friday for now, but Thursday would be a really, really weak continuing jobless claims number that comes out. That's 8:30 tomorrow morning from the usual Thursday report from the BLS. All right, so that is your Russell futures. Let's get back on over to the platform. Let's hit the core sectors quickly, and then we'll keep moving. So in terms of sector posture headed into the midpoint of the week, XLV leads the pack. It's no longer a heavyweight sector, and it's also a little bit more D for defensive in terms of posture. So I'm not thrilled with that leading the charge as the market breaks out to a new record high. We do have underneath it, though, at least discretionary there, as well as financials. We can thank JP Morgan for that, and we can thank, of course, Amazon over in discretionary. At the bottom end of the barrel, though, it's energy and utilities. I just kind of get a little bit of a kick out of the whole crude oil expert thing happening on X over the weekend. And yet, if you were to just go on out to something like a CL chart, we posted this little joke over on X the other day, but, point to the area on the chart where the U.S. removes the president of Venezuela. You'd probably point to something like over here. Oh, volatility. It's got to be volatile. Everybody's talking about all these reserve oil barrels. It's here. Right? The market did nothing. Crude did absolutely nothing there on the news. So unless you're a crude expert, unless you understand the ins and outs, it's not really a sector that's worth trading. Let's rip into the sectors that are worth trading. XLV blasting out to a new record high. That looks pretty darn good to me, and it does speak to not necessarily, well, here's the way I look at it. What segment of healthcare? XBI, biotechs have been on a tear. Right? Really big move in the upward direction there. That's technically bullish because biotech speaks to risk on, right? It's less your, insurance providers. I mean, look at a UNH failing on today's session, right? Back lower. It's more of these speculative biotech names that have really put on more of a show. So that strikes me in the healthcare sector as being somewhat of a bullish undertone to it with the risk on appetite. If we continue along with XLY, not the best close today with the inverted hammer. We did get a little bit of give back into the end of day, and we can thank Tesla for being pretty weak here as well. I'm a little concerned about the possibility of a lower high, and that would weigh on price. The next thing you got to see is either a high or low to maintain the bullish stance, and we're here, or if it fails, now all of a sudden, this is a problem under 118. We're not there yet. We're taking it day by day, but really watching for a higher low to firm up. And then something that looks like this, that is the bull base case. Let's keep moving to XLF. Big give back in JP Morgan, and the 3-bar plays didn't really end up breaking out at all. So failing up here at the highs, not the end of the world, still room for a higher low off the 20 SMA, just like what kind of happened over here on Friday of last week. If we could set something up for a higher low, it might start to trigger things off. The best bet there is to go with GS. Goldman Sachs has the better looking charts of the bunch, noting that the 3-bar play has not violated its breakout point in here versus something like a JPM, which is clearly back underneath the breakout point, as well as a Morgan Stanley. You could look for that pullback into here at a 182.15. So that's what we've got on those banking names, but continuing along with our sectors, XLB materials, we know that the materials have been, mainly from a metals perspective, performing somewhat well, and this is picking up quite a bit. So breaking out, pulling back, needs to hold this prior high. It's the lightest weight sector for the market, so I'm not overly concerned, but 46.35 is a great spot for a higher low. We're basically just scanning for red flags at this point, and the XLY is the largest red flag that I can see so far. SMH, no problems here. Inside day today after breaking to a new record high, pulling back anything over this 376 is fine. Heck, you could come in here and you could close the gap. You'd still have a higher low. Lows, higher lows, no hourly downtrend here. here, so this would be fine. Hourly downtrend to get there, higher low, and go. No problems here. I think that you could easily see a little bit of sustained weakness in the short term to offer the pullback, but it's not enough of a red flag for a trend reversal that has me overly concerned. Nothing to do on these bonds until we get the Friday report, so we'll pass on that. XLI pulling back to the retest level, looking for a higher low basically. That's industrials here. Let's get into the tech sector, which is going to be a mirror image of the QQQ. I think we've pretty much covered what we're looking for here. Nothing in the box. If we can stay above the box, bullish. If we get under the box, bears have something to lean into. Other than that, no real commentary here other than bullish until proven otherwise. Let's take a peek over at comms. Tight until proven otherwise. Nothing to do here. Possibly higher low over today's high tomorrow. Maybe gets along towards the all-time high, but this is not a screaming, obvious chart setup in my view that is suggesting, let's get long here. This is a beautiful pullback into previous resistance, now new support. A little bit more neutral than that with the inside day today. Let's jump on over to energy. Nothing to really do with these stocks. Again, I think this, if you learned anything through this Venezuelan crude oil debacle, please just have the understanding that energy usually is not worth the headache, right? Unless you timed it perfectly and we're already long ahead of the weekend, nobody who bought this on Monday, Tuesday, or today is making money, right? That's the only, and look no further than an XOM, right? One of the best weekly and monthly charts. Big failure today on the gap down back underneath the breakout point. Look no further than a CVX, right? Huge give back after the only time to really get long was Thursday and Friday into last week. And, ever since the gap up, it's been lower. So steer clear of these energy names. Crude, of course, is not moving. In terms of its impact for the S&P 500, it's such a lightweight sector. Maybe there's a higher low in here, but it's not going to move the needle. I think it's more important to watch what the crude price impact would be to inflation more so than anything else. If we look at utilities, this is maybe a little bit more so worth paying attention to with some of the providers being in the nuclear space there a bit more so. I'm saying too much, got to stop that. Wouldn't read into it too much. Lightweight sector. It is D for defensive, so to see it breaking down as the broad market breaks to a new high, not the end of the world, right? What's picking up the slack is some of that rotation back into the Mag 7 names, and we'll take a look at those in just a moment. XLP getting smacked around a little bit today, a little bit lower on a possible failure of that right shoulder for the inverted head and shoulders. I would just let these be. It is a defensive sector, and it is not performing well as we're at all-time highs, so I can't really hold that against the market. What I can hold against the market is the XLY at this point. That's what I can hold against. XLRE with the downtick today based on the new policy. That's, I'm not going to get this correct. I don't know if it's just single families, but of course, no intervention from big corporations in housing, basically. That's it. So some of those big names did take a dive on some of that. But those are your sectors. Let's take a look over at the ratio grid. And what do we see over here? So if you're not familiar with the ratios, video tutorial, top right-hand corner, as always, what do we see? XLK trying to perk up, but really more so sideways still than anything else. This strikes me as neutral. XLF pulling back, but opportunities for higher lows over an upward sloping 50 SMA. Still bullish, still risk on. XLC a bit more neutral, flat at the 50 SMA, which is still downward sloping. XLY, nothing to say about this, tangled at the 50 as well. The top four picture, the top four quadrant in terms of risk on, it's not shouting risk off. It's not shouting risk on. It's probably more neutral to bullish than anything else. This is not suggesting flight to safety, nor is this over here in utilities. Let's take a peek over at the A set. Basically the same read we've had for a week now. This is mostly sideways, so what this is telling you basically is that there's no advantage in either holding tech or cash equivalent there on the really short-term bond, right? So you're just compressing in that. Hopefully for risk on, this breaks to the upside and brings in a new higher high. You're looking okay here in tech versus utilities. Maybe higher lows into an equal high on the semiconductor healthcare, and then, excuse me, over here in discretionary staples, trying to get that higher low into an equal high as well. So it's still, the picture here is mostly neutral to risk on as well. There's nothing that's overwhelmingly risk off. This is the only problem in the broad-based IWF, IWD, Russell 1000 growth versus value. Let's take a peek over at, excuse me, the B set. Might have to take a live sip of water, which I'm not too fond of doing in the recordings, but we'll try it anyways. There we go. Let's get the job done. We got some afternoon plans today, trying to make it a quick one. Gold, not really suggesting much of anything. I think the gold chart itself is more insightful. We'll talk about that momentarily. Bitcoin, this is worth talking about. Bitcoin had that big announcement last night, not today on Wednesday, but Tuesday. After the close, the MSCI said, hey, we're not going to vote to exclude Bitcoin or, MicroStrategy, some of those levered balance sheet plays, basically, from the funds. And yet, what did Bitcoin do? Nobody, you would think the Bitcoin maxis out there, everybody on X who's been saying Bitcoin belongs at 100K plus, that was your opportunity on the catalyst to say, let's rock and roll, let's go. It didn't happen. So I'm thinking that this still has a bear flag in play on the weekly, and we are looking for lower. The Sailor Shift tool did not trigger. It actually untriggered from green on Monday and even into Tuesday afternoon to now untriggered and still reading the red from back over here when the breakdown took place. So nothing to do on Bitcoin, and that might actually be a slightly more bearish take, which neutralizes the analysis a little bit more so over in the S&P 500. So just being kind of honest about what the chart is signaling. Risk appetite as the ES rejects all-time highs, S&P 500 rejects all-time highs. It's Bitcoin saying, yeah, I mean, not quite there, right? TLT ratio, whoa, funky zoom. TLT ratio, though, not quite saying much otherwise. It looks fine. This is still signaling okay risk appetite that way, still trending nicely higher. Let's get into the dollar and rates. Again, probably more on this as of Friday's close, so the weekend update video after we get the full labor report. It still looks like rates may want to move higher here, and on a very strong labor report, you might actually see that. If labor is strong, you might get that break in the upward direction there. Let's take a peek over at, I do want to look at gold before we jump into rates just so I can show you this. The gold ratio is still on this. Let's go over to GLD. Let's go on over to this GLD. Relative to that ratio we were just talking about, this is what I want to point out. If we close this gap and can hold above that prior all-time high, I would technically still have to maintain a bullish stance here on gold. I don't know that I'm long gold for, this is mostly over. I think you're not going to get another parabolic run like what we got from 300 to 400, but I do think that it is possible pullbacks into this area could firm up and attract higher lows over the 20 SMA. So gap fill reversal 402, previous all-time high, not bad here on the GLD if you're looking for that possible trade. Anyways, let's get into that inverted ZT now, which is the 2-year proxy. Very stable, very flat, very sideways. What do we expect out of the Fed tracker tool? Probably not much. 83.9, let's give this a refresh. Make sure it's the latest and greatest. Let's take a peek. Probabilities, yep, 88.9, right? 88.9% odds of a pause in the next meeting. Does this make sense? Absolutely. Inflation moved in the right direction based on let's go on over to this. Let's close up these news alerts so we can see what we're talking about here. Let's take a look at, there it is. So ADP non-farm this morning comes in way better than the prior and at, I guess I would say, a near forecast. That's close for the ADP. This one's typically tough to forecast. So on par there, which is not what everybody's been saying about a labor market that's imploding and getting destroyed. And then most importantly, forget about the JOLTS job openings. That's November. But look at this ISM services employment. Look at the move. 52 is not nothing to shake a stick at. That's right. That's proper grammar. This is way above forecast at 48.7. But more importantly, it's over the 50 mark. The fact that it's over 50 means that it's expanding, right? Remember that the ISM, it reports on a scale of, I guess technically it's 0 to 100, but 50 is the equilibrium, right? If you're over 50, you're expanding. If you're under 50, you're contracting. So you might move in the right direction from, let's say, a 48 to a 49, but you're still technically contracting. But this time, you not only beat the expectation, but you're in expansion territory on employment. So this labor concern where, oh my God, the Fed has to step in and intervene and bring rates to 0 to save the labor situation, this is not it. That is not what you would expect there. Now, also look at prices paid. This is still very hot. Don't get me twisted here. This is well above the 50 handle, but it's underneath the expectations of 65.5 and underneath by a full point the previous as well. So in terms of inflation on services, trying to move in the right direction, still elevated. Again, I'm not going to try to sugarcoat that one, but when I say, in the intro, that the Fed may not be as enticed to cut rates, this is why. You're still expanding prices paid. You're moving in the right direction. Inflation might be easing slightly, but it's still hot. And then the labor situation looks okay. So as I think about those pieces of the puzzle, if the labor report comes in strong on Friday, I don't see why the small caps would be like blasting off to a new record high, and therefore breadth contraction for the market might not add up to a bullish all-time high close for this weekly bar, in which case we have another weekly look above and fail. It's like that's the threat. That's the fundamental threat to the base case that I have as being bullish primarily from the technicals, and the fundamentals could derail this on Friday morning. Right, that's it. Let's take a look at the earnings calendar. Nothing to talk about over here. Applied Blockchain slightly higher in the after hours. We know we're all waiting for big bad WD-40 over here to report on Thursday after the close, saving those data center cabinet doors, preventing them from squeaking. It's just instrumental to the growth of the S&P 500. Let's take a look over at the bond relationships. I wouldn't be shocked to see these sideways, and that's exactly how they are. Sideways, sideways, sideways. The market's expressed its concern when we were sideways, but rather up over here. The market's priced in the inflation bit, but as of right now, it's not screaming about labor based on duration. Let's take a peek at credit spreads. Any problems here? Divergent, but we know that this one takes the cake. It's lower. That means that risk appetite is okay, or at least volatility is low, and you wouldn't be shocked as we get into the VIX to see it around that 15 handle. Here's the HYG confirming the upside break, high, higher high, high, higher high, looking for a higher low and seeing whether or not we diverge on the pullback. That'll be a big tell here, probably something we talk more about into the end of the week over on something like the X platform or in the Saturday update video. For now, they're congruent. If they start to diverge, that'll be something we shout from the rooftop about. Let's move into we already looked at Bitcoin, but there it is, just again, full screen for you. Let's get into breadth. This is why in the intro I said it could be just a little first taste of a strong report on Friday. Look at how breadth contracted today. RSP came in aggressively today, right? This hardly even got in gear up and over the prior day's high. Before the jolts as well as the ISM report even came out, it was lower, right? So if labor is going to be stronger than expected, expect breadth contraction. I think that's what today is foreshadowing. It's basically giving you that analysis, teed up on a silver platter. We talked breadth. Let's go on over to the QQQE as well. Equal weight Nasdaq, not quite as bad here, noting just the inside day over previous resistance. I think your Mag 7 did a lot of the heavy lifting today. We'll talk about why. Look no further than a Google, of course, which I think jumped Apple. Shout out to Siege with that tidbit in the afternoon squawk as the top dog, one of the top dogs, just underneath NVIDIA now. VIX volatility starting to wake up over 15. I think that the labor report on Friday would be the catalyst to really send this. And as we've already talked about, the downside catalyst if breadth contracts. So let's just be aware of that as a mechanic that potentially impacts markets. And it should just be higher, or I guess, how would I frame this? If you're trying to confirm the thesis we've outlined based on the fundamental take, you would want to see the VIX higher into the close of the week, right? That's it. If the market's going to break down based on a strong labor situation. If we go VVIX, not shocked to see this kind of tame over 103 into the end of the week. If the bear situation is going to unfold, volatility futures, still strong contangos. Yes, unwinding a little bit of them there, but still strong, undoubtedly. Look at the 9 versus 30 day over the 0. And we have VIX 1 day as well. A little bit of a creep up, but still on the lows of this overall move. Generally speaking, I don't think breadth, I also want to be clear about this. I don't think breadth is on the cusp of collapsing. I just think that the catalyst on Friday might disappoint buyers who have already initiated new longs near the all-time highs. That's the way I'm seeing it. I don't think breadth is overly concerning where the market's so narrow that it's going to crash and burn and go to zero. I just think that new longs up here, anyone who is buying this Tuesday rally, anyone who's buying this rally, they're either likely already covering, ahead of the labor report, or you just lose a little bit of confidence to entice new money buyers up here at the all-time high if the report's stronger than expected and the Fed's not going to intervene, right? So that's kind of the way I'm seeing it there. All right, spiders, broad market analysis done. Let's take a look over at NVIDIA. Nothing to really say about NVIDIA. I wish there was something to say. It's just inside this consolidation range. If we can get out of it, maybe there's a long to take. We know that this market has been allergic to momentum recently, so please be careful. If this tries to break out of a range, you better be positioned darn well with the correct expiration, or you're just using a levered version of the ETF, a 2x ETF or something like that for NVDL. Something like that maybe, but really getting positioned on it, it's not so straightforward at this point. I would prefer to see a look below and fail into the daily 20 to position here just to rotate to the top end of the range. But if it does decide to go, I'm not going to fight that. I just want to be very careful about the way of participating over 192.25. I don't think the daily chart's broken. We're still over the neckline of this double bottom. We're still holding these lows. We're still holding the daily 50. Not a lot to glean from that daily bar, though. Apple, on the other hand, looks atrocious. Lower highs underneath 266 are the name of the game. Lower highs under all of this overhead supply. Head and shoulders, left head, right shoulder. Neckline's broken. Long-term buys maybe towards 250. We've been talking about that a little bit in the group. That's TBD for a couple of different reasons, but that's kind of a first place to maybe look. 266, though. Lower high counter trend rallies. We're down 4 days aggressive. Let's take a look at the hourly chart. If we go counter trend, so you could have look below and fail on this low like this. I don't think I would be a buyer in here. Instead, I would let this go. And then if it can lift, that's where I'm evaluating for shorts. Does Apple reject this and then get more painful into ahead of earnings? If it reclaims 266, different story. Look below and fail, and maybe there's a reason to get long here with a tight stop, really retargeting, ultimately, a better swing on Apple, towards that. That seems like a pie in the sky to me as of right now. Look at the volume ramp as this has been breaking down. Looks a little bit more like a distribution pattern on Apple more so than anything else. Let's go on over to Microsoft. Saving grace candle today. Saving grace, holding these lows, still technically long swing shares. Reclaim the daily 500, the daily 200, daily 20. Rejecting this high though. I'd personally like to see some consolidation build out again as an attempt, higher lows relative to this, and go, or just go, right? Pull an Amazon and just go. Break the 50, get over this level, and just get out of here. Get going. 511.75. That's my preference based on having a position. But if I just look at the chart objectively, this upper wick does not look all that encouraging, right? Closed at the daily 20. If we look on down at the hourly chart, mild, I would say from this perspective, mild pullback. So on this view, I would say double bottom success over the neckline, rally, new high relative to the neckline, of course, higher low, right, over the moving average stack. So 483 becomes critical into the end of week on Microsoft. If we can hold that, technically you get an hourly bull flag, and then maybe it's off to the races into the top of the range, if not through the 50. That's the optimist take. If you're bearish, you probably want to see a failure back down to here, and then you're shorting the hell out of this thing. Ooh, sorry, that slipped. That usually does not slip in these videos. You're shorting it underneath that 476.60, right? And that's kind of getting you back down to your lows, probably looking at a bear flag rejection at that point, and then you take it from there. But at this point in Microsoft, it is simply a range trade. Long the lows, sell the highs. That's it. Let's take a look over at Amazon. Amazon has just been an absolute blessing. It is a market blessing to have recovered off of that weekday on Friday. Still long swing shares from, believe it or not, way back over here with an ad in, where was the 50 SMA hammer? There it is. So with an ad in there. So still happy to be long that and getting paid on really Tuesday into that 238.75, taking some off there. Looking for origin of the breakdown next, 250.35. Those are about the only, let me be clear about this. Those are about the only two things I've done right this week, just for what it's worth. I'm not trying to play, hindsight hero here. Gaffed Palantir, gaffed, what else did I gaff? ES timing, gaffed on Tuesday. Monday was okay on the NQ. That was fine. Not a home run trade, but just all right. Anyways, not great. Couple things right, couple things wrong. Anyways, these are a couple of the things that are just worth talking about as swing positions, and they seem to be working okay as of now. So higher low consolidation here is ideal, right, over the top of the daily range, but this is also okay. Over the breakout high at 233.25. That's your level to beat. That is the number to beat on Nancy. As long as you're above that, okay. Okay, probably would be open-minded to adding to that Amazon there. Let's go to Google. Google, tough one to get positioned in. I just got to trust the 20 SMA a bit more. We talked about this a little bit in the group, but you've got this 20 SMA hold. Look at how sloppy these bars are on the daily. Really, really sloppy stuff. Inside day, sweep the lows, over the highs, pop and fade, pop and fade, pop and fade. It's over and over and over again. But today, a little bit of sticking action. So pop and fade, pop and fade, pop and fade. Today, why believe anything other than pop and fade? Well, it happened to stick today. So it is higher. It's a very, very sloppy chart in here. Higher lows ideally are something that look like this. Over the 20, that's all I can really say about it. It's got a horrible hourly shooting star here, inverted hammer, whatever you want to call these guys, at the 130 time frame. Gave back a little bit of that end of day rally that tried to look up and over these prior highs. The daily bar is not all hope lost, still closing in the upper third. It's bullish. It's one of the greatest companies out there. I just don't really see a way to get involved in a clean way on something like the hourly, unless you just bought this over the inside day high on a very volatile Friday and said, you know what, I'm going to go loose stop well underneath the low. Unless you did that, you're sitting pretty. But other than that, very, very tough intraday there on the Googler. Let's take a look at Broadcom. Not much to comment on over here. I think lower high H pattern, sub-moving average stack. I think that this could easily use a reset. The chart needs a reset. Brutalized on earnings. Some sort of gap fill reversal. Maybe that gets interesting there as a possibility. Let's go to Meta. And therefore, there's really nothing for me to do on Broadcom right now, right here. Meta, same thing. Nothing to do in this box. I am waiting patiently for the moving average spaghetti to resolve, either into the earnings gap above or underneath and through this thin structure for a possible short, 637.50. Tesla, tough one on the lack of 20 SMA and 50 SMA hold. As of right now, I think that you're probably lower on the inside bar, at least into the 424 level. That's the origin of this breakout in here. So if Tesla can get into it, maybe there's a reason to believe that towards these range lows, it starts to build out a little bit of a firmer low and you get a weekly higher low out of it. But right now, clearly in a backside move underneath the moving average stack and inside day today, closing week on the lows, it would seem like it wouldn't be unreasonable to get into at least the 424 underneath the Tuesday low as a breakdown trade. Look at the weakness into the close. Horrible, right? In terms of a long trade, the close is almost too weak where I wouldn't be really interested in this. but that's the only thing that you could maybe do on an overshoot of the 50 SMA. I'd probably want to see a reclaim of the 50 as a part of that sequence there. So tough on Tesla to buy this thing in that area. Let's go JPM. We talked about this one a little bit already. As of right now, on this low gets kind of tough. This becomes a development that's positive. Higher low is available. I lost for words there. Higher low is available, but you kind of you got to get it back over that all-time high, right? That's just kind of where it becomes a little bit more confident. Really just easy breakdown this morning. In terms of easy, I mean ease of movement. Palantir, another one that's kind of rough here. I don't really see the daily trend as being clean. The reason I say that is, you could argue that you had lows and higher lows, but don't forget you had a low here. So this is a lower low. You had a bull flag that, we're pointing at the flag, but here's the flag. You had a bull flag that broke out to a higher high. This just looks like a lower high to me. And this just generally seems like it's in a distribution range more so than anything else. So I'm not in love with Palantir right here. Daily bar is pretty hideous. You had a little bit of a buy for a scalp to the upside and, maybe a multi-day swing, 2-day swing there. But as of right now, today's daily close doesn't give me the warm and fuzzies with a lack of daily trend as well. So I wish I had something stronger to say on Palantir. I just don't. Maybe a higher low hold here builds out some more consolidation in the junk. And then we, sort of snap out of it perhaps. But for now, rough daily close. Hard to say anything constructive there. AMD, another one that's just been brutalized. Take a look at this. Gap up, failure at the 50, gap, and then failure again, and then today lower also. So AMD, I would not be long of this name. It really failed the biggest level back over here. That's clear on the daily chart. If you take a look at this, there is your double bottom. That would have been over your neckline. No dice, right? NVIDIA on a relative basis is like here. NVIDIA is doing this. AMD's where? Terrible relative weakness, right? So I would prefer to look short on AMD if anything. Maybe not smack on the lows of this move, but a lower high that rejects the 20, a lower high that's in here, rejecting these prior highs could get interesting at 216.50. I don't think the semiconductor theme is dead. We could go look at the SMH, which we've already seen, but it's certainly still higher thanks to the help of MU, thanks to the help of a TSM, right? These things all helping out the theme there. But AMD is not it. Let's take a look over at Robinhood, another one that's just not really it. A lot of these high beta momentum names, maybe we shouldn't even call them all high beta, but Robinhood at least was as it was rotating up through this rip from the April lows. A lot of these things are just cooling off. Look at your Palantir. Very similar to a Robinhood when I think about, the nature of the sloppy action in this digestion. So what's to do about this? I mean, geez, this is like a horrible chart. Look below and fail, stuffed at the moving averages inside this junk drawer. It's not a clean chart. There's not really anything to participate on in here. If anything, today could have been constructive here for a Brigade bolt up and over the 50 into the end of the week, but you're just not getting that close. So patience on Robinhood until proven otherwise. So with that, of course, we've been talking about this over the last little bit. This is a picker's market. The core list of companies is not the only place that you should keep looking. They might have the best liquidity, but you should also take a look at some other names. So let's start with AMAT. Applied Materials. If I could avoid the comma, that would be great. There we go. AMAT daily time frame. Now, I don't want to be a proponent here of buying something that's up this extended from the 20 SMA. It's got an inside bar. I think that it's just worth watching. The same thing with an MU, the same thing with a TSM. It's worth watching this under the inside bar low for something that does this. Do you make money on this into the end of the week versus maybe early next week? I'm not sure. The daily candle doesn't give me enough information. It's just a little inside resting doji. I hate being a momentum buyer in this market. It's just not working in a lot of things. You just basically have to blindly buy the open and trust. If you go to the hourly chart here, you can see why. It's like you blink your eyes, it's 9:31 in 1 second, and you're already here. It's 9:31 in 1 second, and you're already here. So any attempt at a bull flag on the highs is just a poor idea, right? There's no little offering of a momentum continuation move on those types of setups. So I don't think that, again, AMAT is right here, right now, but the inside bar is at least worth paying attention to as it is over on something like an MU, right? A little bit of look above and fail on prior day's high. Does it pull back? Does it need to reset, come in, build a base or a higher low off the 20? Possibly. TSM, similar situation, right? This one's maybe even a little bit better. It tried an intraday undercut and rally at that 321.50, but I think it might need this. It might need to let the 20 catch back up to it, retest the top end of this consolidation range that we broke out of. So those are some semiconductor names there. Another one that strikes me, and this is a part of the three trade ideas, is Qualcomm. Qualcomm was explicitly in there, and that's this. That is over 183. Inside candle today. Again, breakout buys are not necessarily working great. If this could find some semblance of support here, 177 again tomorrow, build out, either look below and fail on the 20. If it could just tighten up and build another inside day breakout on Friday, perhaps, if the labor report is well received from the market, that's another asterisk on some of these setups, then that might be an idea over this flat top, targeting this from the momentum announcement back here when they were getting involved in the AI chips, right? So it's got the flat top base correct at 183, but it doesn't really have, buying, again, I just come back to the same thing every single time. Buying momentum in a non-trending NASDAQ market is just like, what are we doing here, right? And that's just the lesson that is continued to be reinforced by charts over and over and over again since October 10th, when the day momentum died, right? That's what we've dubbed it here. All right, coherent, last one, COHR is the last one I'll share with you, and then we'll save the rest for the group. It's got a flat top base break inside day today, holding the daily 20. I like it. It doesn't look half bad here. It's not extended from the daily 20. It's still tightening up. It's at the right level. It's got clean moves from the past, right? Nice sort of attempt in here. Gappy a little bit through there, but this was nice and linear. This was nice and linear over the 20 SMA. So really starting to spread out, and we'll see if we can get going up and over that 200. So watching for 199.80 on COHR as the all-time high break, but also very, very going to be hopefully watching very closely 195 for a potential move to get out of the inside range, right? That's it. That's what I've got for you in today's episode of the Midweek Market Update. Hopefully a little bit abbreviated, maybe not. I'll have to check the timestamps, but we've got afternoon plans today, so I'm going to shut it down on that note. Hope to see you around the pre-market prep. We're live every morning, 8 o'clock Eastern time, right here live on the YouTube channel. That's a horrible looking 8. We draw better 8s than that, I promise, in the pre-market prep. If you learned something new or enjoyed the video, let me know down below in the comments section or by giving the video a very simple thumbs up. And with that said, I will see you in the next one.